Talk about FY19 in terms of order inflow. Due to the scheduled elections, do you expect order inflows to slow down, which may peg back the sector from the stated recovery that was expected to come through?
Yeah, very good morning. I was hearing to the commentary on the road performance just before I started. And I think, yes, March 18 closed on a very promising note. We awarded, we saw NHAI awarding almost at a record high of 1,22,000 crores worth of projects. Going into this year, you are right that we do expect some amount of slowdown in the award activity, primarily because of three reasons. One is there would be some lull periods during the election code of conduct time. The second main reason why I see the ordering activity to take a little slower pace is because of the financing available in the market. We have to keep in mind that the lender community has shrunk to an all-time low. We have 11 banks in the preventive corrective action plan, which has reduced the number of banks available to fund these projects. And third is the land acquisition issue, where there will be a increased support required from the state governments to really put all the act together, because even if NHAI transfers all the money to them, it is the state machinery who has to gear up and ensure that the land acquisition process is timely completed for the projects to take off. So I think these three reasons will certainly play a role in ensuring that the target that NHAI is talking about is they are able to achieve that. So from the contracting community, I think everybody is looking forward for 8 to 10,000 crores, 8 to 10,000 kilometers worth of project awards this year. The execution is picking up, but the above three issues will predominantly decide how much actually gets done.
So Virendra, in the fourth quarter and Q1 as well, previous quarter that is, you managed to double your backlog in 2 quarters. Do you think this pre-ordering happening ahead of election year is actually going to take place?
I think there are two things to it. Yes, if we look back into our 10 years of listing period, this year was certainly the year where we were able to actually add the highest number of orders. We did add almost 9,000 crores of orders in the last quarter, that is last quarter of FY18. But the record award in last quarter of FY18 was primarily because of clubbing of projects. If you look through financial year 18, there was not much of project award that happened in the first 3 quarters. And because of GST and related clarities on how the annuities would be paid and so on and so forth, all the bidding activity had shifted focus to the 4th quarter. So we saw an increased impetus of awards in the 4th quarter. But going into 1st quarter this year, we have seen again a lackluster award, primarily because of the reasons I mentioned above, that there is not much financing available right now and people are struggling for getting the financial closures done. So we'll have to see how the activity further picks up.
HAM is the preferred mode for awarding projects in FY18. Do you expect competition to increase in hybrid annuity projects, which in turn will lead to aggressive pricing and reduced profitability?
Yeah, I think hybrid annuity projects also are playing out well now. Yes, that has been the preferred mode of bidding for the government. In March 18, we also entered the HAM sector. We also bagged almost 7% market share of the HAM projects that were awarded in FY18. And it looks to be a promising pricing going ahead, because if we track the HAM awards that were done in the first or second year of the awards that happened on the HAM mode, they were getting bid at almost below or NHAI TPC kind of levels, whereas that pricing has significantly improved into this year, and people have bid at a much rational pricing than what had happened before. So the product is being understood well now. People are structuring the financing for that in a much better way, and even us, when we entered into it, we have bid with almost 10 to 11% PAT margins, and 11 to 12, around 11-12% IRR on the equity that we are investing. So I think this model is now being well understood, and we expect this to remain the preferred mode of award for this year as well.